Welcome, everyone, to the Daniel Krug and Associates Wealth Management Review for September 24th, 2020. Today's presentation is titled Markets and Elections. My name is Rocky Istvan. I'm the Chief Compliance Officer and Associate Wealth Manager at Daniel Krug and Associates. Daniel Krug will be joining me. He is the CEO and Senior Wealth Manager at Daniel Krug and Associates. I will remind you that this presentation is for informational and illustrative purposes only. It is not a solicitation and should not be considered investment or tax advice. If you have any questions, please give us a call in the office and we'll set an appointment to help you get those answers. We're looking at about 35 minutes today for our presentation. This session will be recorded and available on YouTube later for anybody that wants to review it or couldn't make it at this time. Everyone will be muted on this. However, you can use the chat room and type in any questions on the right side of your screen or just to say hi. We want to thank both CNR, City National Rockdale, and the Capital Group for their contribution to the data that we're presenting today. And I'm going to pop on and say hi to everybody. It's good to see you guys. Glad to have you on board. Just a reminder what wealth management means to us. Your overall investment strategy is at the core of everything that we do. It's the foundation for managing wealth, and that's important. And just about every firm out there does some form of investment consulting. Some does it better than others. However, where we differentiate ourselves is in the area of advanced planning, and I'm going to shrink myself down here a little bit so that I don't cover up everything. There we go. Those advanced planning areas are wealth enhancement, and you can see the different strategies we work on under wealth enhancement, wealth transfer, wealth protection, and about a third of our clients are charitably inclined, so we have many strategies that can improve your tax and gifting situation with charitable giving. Agenda for this week is we're going to go over some of the major developments that have taken place, an update on COVID, the impact of elections on the market itself and where it's at, opportunities and strategies, and we'll leave time for answering any questions that you may have at the end. So let's go on to major developments. Okay, major developments this week. COVID trends are still moving in the right direction. However, schools have started up and there's been a lot of difficulties with that and different approaches to how to deal with education. And that's still going to be, I think, an issue moving forward as these schools are trying to get the job done in educating students. 48 out of 50 states really have a very low transmission rate. That means that basically a rate of below 1 means that a person that already has the virus has a very small possibility to transmitting it to less than one person, which is good. Finally, we're getting there, and that's due to how we're handling it. Europe, the COVID flare-ups that we've seen have not significantly impacted fatality. So there's been an increase in positive tests in Europe, yet the amount of fatalities and even hospitalizations have stayed relatively flat and low. So that is not increasing. Healthcare treatments improve COVID outcomes. So a lot of things that we've learned is being implemented at the doctor's offices, and we're finding lower severity and fatality rates. The vaccine progress continues. There's going to be an issue, though, we believe, with just having the infrastructure in place to be able to distribute that vaccine and get it to where it's needed most and the quickest. So that will probably be an issue as those vaccines become online. And consumer spending data has improved in September. So that's a positive that we're seeing. There was a little bit of a pause at the end of the summer, but it is moving forward and believe that that's going to continue throughout the rest of the year. Market volatility. We've seen some volatility this week and beginning the end of last week. So it again is because valuations are very high. We're going to touch on that in a little bit. So when you have high valuations, littler things can impact the market. The economic fundamentals, though, do continue to improve. When you're looking at the underlying fundamentals of the economy, it has slowed since the second quarter. However, it is still, the economy is still growing. Consumer confidence is remaining low because we've had some business startups, especially in the Southwest, and then they've had to slow that down. But business optimism is improving. Inflation is not a concern. The Fed keeps coming out and updating their estimation on the economy and what needs to be done from Fed policies. And they see no reason to change interest rates for 1 to 3 years. So it's give us a level playing field, a known factor out there so businesses can borrow and take advantage of low rates and get capital moving. Our investment strategies have been focusing on high quality companies at appropriate relative valuations. In this type of market, when we've got this kind of volatility and we've got these issues where some businesses are going out of business, others are actually growing at faster than normal rates, being able to select those industries, those sectors, those companies that are going to profit and stay away from those that are not is very, very important, and keeping the valuation of that company in line with what you're paying for the stock. So that's one of our biggest things that we're focused on right now, along with the money managers going into the end of this year. The U.S. economy and the emerging market, Asia, is recovering faster than Europe and other regions.